Hello everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeezes. Today, we're putting a specific stock under the microscope, one that's caught our attention due to some truly eye-popping cost-to-borrow numbers. But before we get into the details, a crucial word. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk about VEEE PowerCats company, trading under the ticker VEEE. Show VEEE logo / stock chart. This company operates in the consumer cyclical sector, specifically recreational vehicles. VEEE PowerCats designs, manufactures, and markets recreational and commercial powerboats. Think sleek catamaran boats, dual-hull vessels under the VEEE brand, and even V-hull boats like the Aquasport line, perfect for fishing and other water-based fun. With a market capitalization of just $13.09 million, VEEE is firmly in small-cap territory, a space often ripe for volatility. What is cost to borrow and why it matters? So, what exactly does hard to borrow mean, and why should you care about the cost to borrow, or CTB? Imagine you want to short a stock. To do that, you first have to borrow shares from someone who owns them. Lenders, usually brokers, charge a fee for this. This fee is the cost to borrow. When a stock becomes hard to borrow, it means there are very few shares available for short sellers to lend. Think of it like a limited supply of hot commodities. Naturally, when supply shrinks the price to borrow those shares, the CTB skyrockets. And yes, CTB fees can easily exceed 100% annualized, sometimes even reaching into the thousands because these are annualized rates applied daily. A high CTB indicates significant demand from short sellers vying for a scarce resource, often pointing to strong short interest relative to the available float. Why this stock is hard to borrow right now? VEEE has appeared prominently on our hard to borrow screener, and here's why. The annualized cost to borrow fee for VEEE right now is an astonishing 805.0%. Highlight CTB number. Even more striking, the CTB has seen a dramatic increase, rocketing by an incredible 833 percentage points over just the last 5 trading days. This kind of momentum is a serious red flag for short sellers. Adding to this scarcity, there are only about 5,000 shares currently available to borrow across major brokers. Compare that to the estimated float of just 0.4 million shares for VEEE, and you can see why this stock is considered extremely hard to borrow. Our internal composite squeeze score, which factors in CTB level, momentum, borrow supply, float size, and price action, puts VEEE at a notable 67.0 out of 100. Squeeze mechanics explained. Now, let's connect the dots to a short squeeze. When a stock like VEEE is such a high CTB and a tiny supply of borrowable shares, short sellers are in a precarious position. If the stock price starts to rise, short sellers, who profit when a stock goes down, face increasing losses. To cap those losses, or if they're forced by their brokers to cover, they have to buy back the shares they initially sold short. When many short sellers are forced to buy back simultaneously, it creates a cascade of buying pressure. This forced buying can rapidly drive the stock price even higher, leading to a short squeeze. It's a self-reinforcing loop where rising prices force more covering, which further fuels the price increase. It's important to remember, however, that a high cost to borrow does not guarantee a squeeze. It can also simply mean that short sellers have very strong conviction in a bearish thesis and are willing to pay a premium to stay short. Dilution risk check. When we analyze potential squeeze candidates, one of the first things we look for is dilution risk. Dilution is when a company issues new shares, increasing the total number of shares outstanding. This typically lowers the value of existing shares and can completely negate any short squeeze potential, as the supply of shares suddenly increases, giving short sellers an easy exit or more shares to borrow. For VEEE, our checks indicate no recent dilutive SEC filings like S-1, S-3, or 424B found in the last 90 days. This is a positive sign, as it means the company hasn't recently flooded the market with new shares that could undermine a squeeze thesis. We also found no recent reverse splits for VEEE in our look-back window, which can sometimes be a precursor to dilution or indicate financial distress. Before we continue, let's quickly reiterate our important disclaimer. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what has VEEE been doing lately? The stock today saw a minus 10.99% change. Over the last 5 days, it's down a modest minus 1.28%. But zoom out to the last 30 days, and VEEE has surged an incredible plus 331.74%. Show chart with 30-day gain. This kind of volatility is typical for microcap stocks with high short interest. Volume-wise, today's trading saw 772,300 shares change hands, which is quite low compared to its 30-day average volume of 4,394,803 shares. This means today's relative volume is just 0.2x its average. Low relative volume on a down day, following a massive run-up and with incredibly high CTB, creates an interesting setup that traders will be watching closely. Keep an eye on the borrowed desk for VEEE. Any further decrease in available shares or a significant spike in daily volume could be key indicators. When VEEE Parkat's company, or VEEE, presents a fascinating case study in the hard-to-borrow landscape. With an 805% cost to borrow, a rapidly dwindling supply of shares, and its history of recent volatility, it's certainly on the radar for many. However, remember that these are just data points. A high CTB is an indicator, not a guarantee. The market can be unpredictable, and short squeezes are never a certainty. Always understand the risks involved with highly volatile stocks. If you found this deep dive into VEEE insightful, please give this video a like, subscribe to the channel for more unique educational content, and let us know in the comments what other stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next video.